Welcome to the CFD weekly overview of the global financial markets. The euro strengthened against a weaker dollar. The European Central Bank confirmed softer economic data, which prevailed in the eurozone. But the common European currency was supported by good inflation expectations, remaining within the range of the ECB's interest rate guidance. The British pound has rallied some 6% from the beginning of the year, but further gains may be limited unless the UK Parliament emerges with a convincing majority on the vote for an alternative Plan B for Brexit. The Japanese yen slightly waned against a weaker dollar, despite weaker export expectations for the country, due mainly to the trade war between the US and China. Overall, the US dollar index fell to just above 95 levels, a two-week low, affected by fears of a possible slowdown in interest rate hikes. Market participants will focus on the Federal Reserve's policy meeting on Wednesday and future guidance. Chairman Jerome Powell is expected to acknowledge growing risks to the US economy. The Turkish lira was little changed against the dollar as Trade Minister Al-Bayrak attended Davos and expressed confidence that the economy won't fall into recession this year, as some economists fear. US indices were mainly flat last week. Major tech giants such as Apple, Microsoft, Facebook, and other business behemoths such as Tesla, Boeing, Visa, and Amazon will all report their quarterly results this week. US charges against Chinese telecom company Huawei raised uncertainty over the possibility of any progress during trade talks between US and China, which are taking place this week. Oil prices fell last week. The US oil rig count, which added 10 new rigs, has provided some support since Friday. The political crisis in Venezuela also provided support for crude, although Saudi Energy Minister Al-Falih stated that political turmoil in Venezuela would not have much impact on global oil markets, which remain well supplied. Gold traded higher, breaking above the 1,300 level for the first time since October last year. Gold has been supported by trade tensions, dovish statements from the Fed, and the recent weakness in the dollar. You've been watching the CFD Weekly overview of the global financial markets.